Yo, what's going on, guys? I'm going to be showing you guys some ICT setups to take and what's not to take, okay? But this is mainly going to be focusing on ICT setups not to take based off a few reasons. So I'm going to be backtesting some setups and explain why it would be a good setup or why you shouldn't take it. Most of the part, I'm going to say why you should not take them, all right? So right here, okay? If you look at the 15-minute, you can see that we are in a giant liquidity void. We've definitely gotten the same exact thing, the same exact setup in my years of experience of trading. A lot of news events like non-farm payroll dumps, and then we pump back up like this in a solid uptrend. This has happened a lot. So here's a setup not to take. So you can see that we have displacement over this low. It's a trend continuation, and there is a fair value gap right here, okay? So if you look at this fair value gap right here, and we can see this is clearly bounce, but what happens when you go to the smaller time frame? Well, if you go to the smaller time frame, many people would they'd short this, okay? And this is a valid short. We did talk about this in my Discord, and I did take this. This would be a valid short. Why would this be a valid short? Well, at the point in time when you're there, we were still never hit this bottom fair value gap, okay? Yes, we could have bounced off here, but that was unlikely because it was not in discount, okay? So this fair value gap was in discount. It was at the 0.705, as you can see. But if we go back to the 1 minute, this would have been a valid short down to the 0.705, okay? But then here's a setup that's not good, okay? And I'm going to explain why. This right here, okay? So you can see that we kind of get an initial rejection here. But why would this not be a good setup? Well, this would not be a good setup because on the higher time frame, we're in the middle of a 15-minute fair value gap. And obviously that's going to, and we had the market structure shift over this high, this energetic displacement over this high, as you can tell. So that's going to trump this short, okay? And yes, this short worked out, but we were in premium in the short. When we draw the fib right here, if we draw the fib right here, we are in premium the short to go to discount, but in this one we are in discount, so this was way riskier. And also this short, you can clearly see that we had this displacement up, so we create this fair value gap here. Obviously we created the fair value gap here too on this displacement up, but the difference really you want to take into account is this one, okay? This one was a premium, this one was a discount. So if you're shorting in discount or more algos are going along, well, yeah, you're going to get wrecked. Also, if you pay attention to this candle, we consolidate around this 0.705 level, and then this candle is a huge shift up. And although there's no like solid market structure shift, you can definitely kind of notice a little volume buy volume change in this. And what do I mean by that? Well, we kind of trickled down to these candles, small candles, and then boom. This is going to have a ton of leftover orders in here, especially because we bounced out the 0.705. And instead of just randomly longing the 0.705 just because, this is like an area where you'd wait to see what happens at the 0.705. So we wait to see what happens, we get that shift up, and then here's your fair value gap right there. There's no market structure shift in this example, but the reason why you want to take this one is one for that reason, because we have this giant candle up. We're in discount on the higher time frame, which is better for longs, okay? And we we have really no liquidity grab, but we don't have a liquidity grab with this either. This is more of a trend continuation. But I think the main thing you should take away from this is, are we in discount or premium? And obviously in this one we're in discount right here. So the short would not be as valid as this. Whereas this, we're shorting down to our entry, right? And this actually looks like a good long setup right here. Let's see what happens. So we just almost have the 0.705 and we're in discount. We have equal lows that we just went under. So I definitely expect the bounce here as we were getting. So you can clearly see that. But this is not a good setup to take because Unlike this one is on discount where you don't want to be shorting yet. And although we do get a little retracement from this, again, it's not smart to short this one. The higher time frame, we are in a 15-minute fair value gap on this because the chances we get kind of a 15-minute fair value gap not working in discount at the 0.705 is very rare. And let's say it didn't work. Well, you would still probably get a bounce from it. So, like, you can usually expect 5 to 10 points off those fair value gaps. Well, depending on the session, obviously Asia might be a little different because the volatility is less. But you don't want to trump those higher time frame fair value gaps. So this is an example of a setup you should not take because we got the energetic placement back up. Obviously, we did here too. But this was a premium and this was in discount, and you don't want to be shorting right here when we're in discount. So, so far this long is working. Let's see what happens here. This is another ICT setup where I would not take perhaps. So how do I explain this? So maybe I'll take the bounce here, but I probably, let's say I didn't take the bounce here, I would not take the short here. Why? Because this is an overall bullish setup. We get the market structure shift, we hit this fair value gap, and then we're bouncing. And yet, even though this could work out as a short, it's kind of gambling because we're in between two fair value gaps. So that's another kind of a setup I don't really take. When we're in between two fair value gaps, I find I lose the most on those because one fair value gap's obviously going to trump one over the other. And yes, maybe you can take two, like if you're in between two fair value gaps, yes, you can maybe take it if you have a clear indication of where liquidity is. But on the 1 hour, I'm not too confident on where we're going right now. If I'm being honest, what I do notice is on the 4 hour, like we bounce from the daily fair value gap, okay? We bounce from it in discount, never quite hit the 0.75. So, like, yes, this is bullish, but chasing up here would not be the time to be bullish because technically you could consider this as a market structure shift. You could even consider this inducement. On the 1 hour, let's see, we're just in this giant void still. So this is kind of another setup I want to take. And you can see when I'm kind of explaining this, I'm not as confident as how I'm explaining this. So I literally just told you guys, like, where we hit discount on the daily or on the 4 hour or whatever. But again, this could be an inducement. This could be market structure shift. So when you're not confident like that, then those are the setups you do not want to take. This setup, as soon as you got this displacement, and as soon as you saw you wanted to long here, well, as soon as you got this displacement, this setup is like a setup that screams out to me because we have the huge giant dump candle. We're still in premium. I'm expecting a long entry down here at this 15-minute fair value gap, so this is kind of a long entry that kind of screams out to me. So I'm going to go over one more example of a setup I will not take. Let's try to find one maybe up here. This is the setup I would not take. So obviously you can see this giant fair value gap here. Why would I not take this setup? Well, unlike so in this example right here, you have to, one, pay attention to the higher range. So it'd be from here to here. At the point during the setup, we are still not in premium. We are in discount. So again, that's going to make it low probability. And a lot of setups with like these V-shaped recoveries. So not a V-shaped recovery. You obviously won't see this. A lot of setups with this giant dump candle below multiple, like at least 3 or more old lows, I never take because the chances of this being an actual market structure shift is very slim. Why? Because there's probably so many stops resting up under here anyways that it's not really like a true market structure shift. A market structure shift, you want it to be like one swing low or one swing high, okay? Not like a million. Obviously, like, this could have broken down and went way further, but the chances of this not being a liquidity grab when there's 1, 2, 3, 4 lows we need to break is very slim. So a lot of times I will not short those or long those depending on which side it is. I do like to make sure it's like at least one swing high or one swing low, and it has to be really obvious. So again, if it's a setup with multiple swing lows or multiple swing highs we break under, I don't really count this a market structure shift, and that's not really a setup that I take. Again, they do work sometimes, but not a lot in my experience. So That's that. Let me know if you guys have any questions. Can definitely do another video like this and explain some more setups I want to take. This is a setup I would not take, but this worked. Okay, so keep in mind this worked. And someone asked me yesterday, would you take the setup? Well, no, I wouldn't, because one, we have a fair value gap here, so this would be the way safer entry, and two, you can see this is a premium, but look how tiny this fair value gap is. Yes, that's good risk reward, and yes, that's something to try, but I've seen a lot of tiny fair value gaps like that get totally broken through. And if you look, there's not really any obvious market structure shift here. Obviously, there might be on the smaller time frame, but this is not a fair value gap to take because one's just simply too small, and there's still an unfilled one up here. So that's kind of another example of something that I don't take. Also, a lot of you guys have questions when we have a million fair value gaps down here, and usually that's when I narrow the down to the higher time frame, or I'll draw a fib. So from this ring low to up here, I'll draw a fib, and obviously this one's the closest to the 0.705. And if we do get a ton of fair value gaps like this, or a giant one, I really like the 0.705 entries because it's the safest, and usually there's almost a reaction up there. If you enter way too early, right when you go into the 0.5, right when you go over, there's still a lot of room that you probably could get wrecked with, which means if you enter there, we could definitely go to 0.705. So the big candles with a lot of our fair value gaps, look for the 0.705 entries. If it's like a small little single fair value gap, as we saw today, like if it's a small fair value gap, so right, where is it? I think it's on the 3 minute actually. Right, let's see. So like right here, this is a small single fair value gap. There's no fair value gaps below. There's no fair value gaps above. Well, these are the ones I prefer. So on the 5 minute, or the 15 minute, if there's a ton at the same time, I'd really just wait. I would I1 in discount and then see what happens when you get there. Well, then what do you do next? Well, when we get there, watch for the reaction. Go to the 1 minute here. Look for another long setup. So if we hit this level, you see us reacting to it, you see us bounce off, then that's when you go to the 1 minute and look for a confirmation long setup, okay? So, yeah, this is but a decent video. I don't think anyone else posted this kind of video where you talks about ICT setups you shouldn't take. But I know I do struggle with, oh, should I take this? But we're in between two fair value gaps, so how will I know where we're going? Blah, blah, blah. So that's like kind of something that I'm still figuring out too. So other than that, hope you guys enjoyed. The new Patreon month started today, or yesterday. So should have a good month. Trying to have no losses. I don't know if I can do it, but yeah, other than that, peace out.